Well, over to the crypto world now, and the cryptocurrency community is actually turning on Gary Gensler, who is the head of the SEC. Matt Harry of DigitalX joins us now for more on this story. Matt, it's lovely to see you. Thanks for your time.
Good morning, Holly. Nice to be here.
Matt, what's the latest details on this? Why are they turning on him?
Well, look, I think Gary Gensler was when he was appointed to the head of the SEC earlier this year by the Biden administration. He was seen by many in crypto as being very pro crypto or digital assets. He understands the space very, very well, having lectured in it at MIT. And a lot of people see his most recent comments as a bit of an A2 Brute moment with Gary Gensler. But he's far from forsaken digital assets or the cryptocurrency industry. He's just made words to the effect that the SEC or he doesn't see any long-term viability for 5,000 to 6,000 private forms of money. And he's also said that it's worthwhile putting in place an investor protection regime. So very, very sensible comments that I certainly agree with and many in our industry agree with. So people need to settle down a little bit. He has said that he is not looking to, or the SEC is not looking to regulate out the entire sector. He's saying that at worst, the SEC will look to regulate out some of the current market. He sees many current digital tokens as securities. The SEC has a particularly poor outlook on things like lending platforms, DeFi or decentralized finance that I've spoken about many times on the program, and stablecoins. So Gary Gensler kind of likened those particular protocols to the poker chips in the Wild West casinos. So if you're an investor in those types of protocols, maybe some cause for alarm, but the SEC is working alongside banking regulators at the moment to obtain increased authority over the space from Congress. We think that's going to be a very, very good thing longer term, bringing those investor protections to our fledgling market.
Yeah, and Matt, there's also talks that the SEC may even approve an ETF during October. What are the latest details on that?
Yeah, so Gary Gensler, oddly enough, has been at the in the thick of the action again here. He's verbally come out in the past couple of days and supported a futures-backed Bitcoin ETF, and this is kind of coming during a period where we're heading into a period of findings on several major or significant ETF submissions with the SEC. The likes of Van Eck, ProShares, Galaxy all have submissions that are sitting with the SEC at the moment to launch a Bitcoin ETF. The end dates for those submissions and decisions by the SEC start to roll in from mid-October through to the end of October. So very, very interesting that Gary Gensler is making these comments now. We did see a senior Bloomberg ETF analyst in Eric Balchunas come out in the past few days and state publicly that he is expecting one of these current submissions to be approved. So he's expecting a SEC approved ETF to drop into place in the month of October. So that would be very, very positive for the broader industry. Could it be that the SEC is looking to fortify the market and provide, I guess, an exit point or a safe haven for investors in the market in the form of a Bitcoin ETF while they regulate out some of the more speculative elements of the market? Perhaps, certainly very interesting, and it's got everyone waiting with bated breath to see what the SEC's next move is during October.
Interesting. Also, I wanted to get your opinion on this. We know China is cracking down on the crypto market once again. What are your thoughts on that, and what sort of, I guess, flow and impact will that have on the market?
Yeah, look, China has cracked down now on every portion of the digital asset space. They've done it repeatedly over several years, 6 or 7 years. They recently outlawed mining, as many people will be aware. One of the major criticisms prior to China outlawing mining was that Bitcoin mining was too concentrated in the hands of the Chinese. So that's actually been a very positive thing. Those miners have shifted to other geographic locations around the world and switched those mining machines back on. So there's been greater decentralization come about as a part of that ban. In terms of the other stuff, banning trading in digital assets and exchanges, it's all happened before. It's kind of like the Chinese coming out and re-banning the things that they've already banned. So short term down, which we've seen, but longer term, certainly not fatal to the industry by any stretch of the imagination. Things keep moving forward. Most regulators around the world are very, very supportive of our industry, and many have stated that it would be virtually impossible to totally outlaw digital currencies without actually switching off the internet, which is really not going to happen in any other place other than China potentially. So yeah, we're not concerned about this longer term at all.
Yeah, and I guess what else have you got your eye on for the remainder of the week and into early next week as well?
Yeah, look, it's been pretty quiet across the market. It's unusual that I get to say that in digital assets. We've seen Bitcoin itself ranging between about 40 and 45,000 US dollars. We are seeing a peak in negative sentiment though, with the fear and greed index ticking below 30, which means that sentiment is heavily bearish. Those extreme levels of sentiment can act as market pivots. So potentially we've found a bottom, although basically the entire market at the moment is expecting a bit of a drop down to around 38,000 US dollars before the next leg higher. What tends to happen when everyone's expecting the same move is that those moves either get front run, which is potentially what's already happened, or those levels get absolutely blasted through because you get a lot of longs being put in place around that 38K level. One of the larger players could easily push the market through there and tap liquidity lower, which is what I think is the more likely outcome. I think we see a clean out of longs and a tapping of liquidity into the mid $30,000 range before potentially a pretty strong October. And all things being equal, and the macro picture not deteriorating with traditional markets, we expect the final quarter of 2021 to be a very strong one for the space.
Matt, Harry, great to chat with you. Thanks for the update on this. We'll see you next week.
You're welcome, Holly. Thank you.